Welcome. This is Will Allen with Sentara Capital. Financial conditions continue to be very challenging, to say the least. Over the weekend, the Federal Reserve cut interest rates from 1% down to 0 in an effort to try to stem what has been a very difficult environment for the economy, basically a complete stop both in demand and supply. And that is very unusual. We typically have not seen an economic pullback before where you had a complete stop. Not just here in the US, we are seeing the same thing in Europe and much of the globe right now. And it's making conditions very, very difficult for investors. One of the things that we wanted to point out is that this thing is moving very rapidly, and what we saw last week, especially late last week, was basically investors hit the sell button on any investment they had. So gold was down more than stocks last week. Utility stocks, typically a more defensive investment, were down almost twice as much as the S&P 500 is. Real estate investment trusts are down more than the S&P. Even Bitcoin was down 35% last week. That was supposed to be an investment, was supposed to hold up when the real economy hit turbulence, and that did not happen. So typically when we see everything being sold, no discrimination, that typically lets you know, hey, we're at a level of panic selling we haven't been to in quite some time. Another measure we've talked about before is called the VIX, which measures volatility. Today, on Monday, hit an all-time high, more volatile than at any point during the financial crisis, during 9/11 or the dot-com bubble, which just lets you know how big of a panic a lot of investors are in. So let's talk a little bit about what we want to see going forward. So in coming weeks, we certainly are expecting the news flow here in the US to still be pretty darn negative. In particular, there's going to be a lot more testing done this week for the coronavirus. So cases here in the US is going to skyrocket. This will not be a surprise, but this still can scare a lot of investors. So we have to keep that in mind. One thing that we do have a little bit of a template of is in South Korea, in China, a few other Asian countries. They are ahead of the US, and that matters because we have seen their cases rise quickly, peak, and then start to decline, new cases. When cases started to decline, stock markets in South Korea, in China, etc., really firmed up and are in a much better place than they were when the news flow was very negative and new cases were still skyrocketing. So be on the lookout. Expect this week there's going to be a lot of new cases, probably into next week as well, a lot of negative headline risk with that. To this point in our client portfolios, the only actions we've taken were late last week on Thursday when the market was down 2,000 points. We did what we called upgrading the portfolio. We got rid of small cap stocks, we got rid of high yield bonds, mid cap stocks, and we upgraded those into higher quality bonds and into stocks that are companies that have very good balance sheets, that are in very good position, market leaders. And we did that because this shutdown for the next month, 2 months, whatever the time frame ends up being, it's going to make it difficult on companies that have a lot of debt. Notice we don't want to be in companies like the travel stocks, the airlines, the cruise companies, small cap companies, companies with high debt loads, because it is going to be a challenging period of time and there's just no way to know what's going to happen to those businesses. Eventually, could we add those to the portfolios? Possibly, but for right now, there's many very well-run companies that were much better candidates at the time. Now, I will also add, there is going to be a time where we want to get more aggressive and take advantage of these major declines, which many good companies down 30, 40, even now 50% in just a couple months. But we aren't there yet. We need to see the news flow get a little bit more negative, see those case numbers increase, see more cancellations. then we're going to have our time where we want to step up and take more risk. The good news is there will be a way out of this. This is not going to be a situation that is more difficult for us to overcome than the financial crisis or the combination of the dot-com bubble and 9/11. And the bottom line is, as we sit here currently, we see panic selling in the marketplace that you can go back 50 years. And when it reaches these kind of levels, when you look out a year, 2 years later, every single time the prices that stocks sank to during those periods, you look back and you said, that was a very good buying opportunity. And I believe this will be no different. I believe the economy will bounce back very strongly from this. As we get past the worst of this virus, the consumer will resume spending money, businesses will get back. There could be some issues with small businesses in the short run with how they're funded, them managing their debt loads. There are going to be some layoffs for their employees, no doubt about it. But it's not going to be the kind of thing we saw at those past times where you had unemployment just soar. And again, when you look out a year, 2 years from now, quality, well-run companies, we're going to look back at these prices and say, that was a great, great buying opportunity. We don't get many opportunities, quite frankly, in the last 40 years where you have a mass sell-off with stocks and positions down 30, 40, 50%. So hang in there. We're managing your accounts. We're here, and we'll take care of you. Thank you.